Hey everyone, welcome back. Hope everyone's doing well and had a good day in markets today. This video is a quick recap of how Nifty behaved on 7th of July. We'll discuss a 5-minute chart one bar at a time, and we will later discuss what we expect from tomorrow. A very quiet and a sideways day today, mostly a order market. Market remained within an 80 points range, which is quite unusual. Just most of the trades today were just scalps, buy low, sell high, quickly exit. Difficult to hold any trade for long in a market which looks this quiet. So what was I expecting going into the day? Let us discuss beginning from the higher time frame chart. We have been rallying in a bull trend for almost 50 plus bars here. This bar here, the Feb month bar, was the first bar in last 53 bars to have closed below EMA. Whenever the market does anything for the first time, 80% of the times it fails. This was the first bar in past 50 bars to have closed below EMA. So there was a 80% chance that this entire sell-off here is going to be a bear trap. And that is what happened here. Also, the April month low was also a high low double bottom with the June month low. So there is a 40% chance that we might break out above the all-time high and rally for a measure move all the way to 31,000. However, if you look at the past few bars here, if you look at all the bars to the left, we have been rallying. We had a big move up, then down, then up. So big up, big down, big confusion is more likely rather than a breakout above and a strong bull trend. So 60% chance we are going to remain in our trading range. Only a 40% chance that we might break out above this and rally for a major move all the way to 31,000. Monthly chart, yes, it does look bullish, but we are in the sell zone right now. If you look at the weekly chart, you can see a parabolic wedge here. Also, this bar is the biggest bar in last 10 to 11 bars. This is more likely going to be an exhaustion gap. Also, we on the weekly chart, we have been away from the moving average for quite some time here. However, the price action does not look more than average. The bulls will not be willing to buy if the price action is not more than average. If you look at this bar, we had a big tail on the top here as well, big tail on the top. Then there was a bear bar. Then there was a strong bull breakout bar. However, look at the follow through here. Again, we had a strong bull breakout bar, but look at the follow through. All of that indicates that the market is about to correct. The market might approach the moving average just by staying sideways, or we might go sideways to down. Also, just like how we discussed on the 5-minute chart, after a wedge top, the market usually corrects for 2 legs and 10 bars. This is just the first bar. So I'm expecting 2 legs down for about 10 bars here, maybe all the way to the bar 10 low. At minimum, we are going to close this gap. If this is going to be an exhaustion gap, like the high of this bar, 25,222 is about to close. The gap between this bar high and this bar low is about to close. That is what happened when that is what happens when the market makes an exhaustion gap. First target is usually the closing of the gap. The second target is usually the low of the climax bar and around the moving average. So I'm not expecting a lot of strong buying happening in the further few weeks unless the market corrects for about 5 to 10 bars here for at least 2 legs, somewhere near the weekly moving average. Even on the daily chart, if you look at all the rally here, yes, we are in a bull channel. However, there's too much overlap and bad follow throughs for the bulls. We had a breakout point here. We broke out above this high and we did pull back. We broke out above this high, we did pull back. We broke out above this high, we did pull back here. What do you think will happen if we break out above this high? We did break out above this high as well. We did get a good follow through, but however, look at the next few bars. We have been pulling back for last 4 5 days here. The gap is still open. However, I expect the gap to close here and the market to at least come somewhere around the daily EMA. The same logic applies here. This is a bull channel. We have 4 to 5 pushes here. And after that, the market usually corrects for 2 legs to 10 bars. And this is just 5 bars down. Yes, this is a buy signal, a high to buy signal, or maybe you can call it as a wedge bottom and a reversal up. However, we are far away from moving average and the market has just corrected for about 5 bars. So there was more likely sellers above the high of this bar rather than buyers. The gap is yet to close. We did approach the breakout point, however, we did not close the gap here. So what was I expecting going into the day? I was expecting more likely sellers above the high of this bar and the market to more likely remain sideways to down. If you look on the hourly chart, there's a wedge bottom here as well. This wedge bottom made things a little more sideways, made me more sideways biased rather than bullish or bearish. Why is that? Whenever there is a wedge bottom, as I explained on the high time frame chart, the market usually goes for 5 to 10 bars up or down. We have we had a rally for about 4 bars here. I was expecting the market, even if we do pull back, even if we do have a deep pullback, I was expecting the market to have at least a second leg up and stay sideways to up for about 10 bars. So this is what made things confusing. On the daily chart, I'm expecting the market to remain sideways to down for about 10 bars. And on the hourly chart, I was expecting the market to remain sideways to up for about 10 bars. We were up for about 5 bars here. So next 5 bars also, I was expecting the market to remain sideways to up. And that is what caused the market to get stuck in the range. The bulls on the daily chart did not want to buy above this high, and the bears did not want to sell unless the market remained sideways to up for about 10 bars. That is what caused the market to just remain in this range here. Okay, let me mark the previous day support and resistances. This is the previous day high. And this was the previous day low. We had a wedge bottom, so I was expecting the market to be sideways to up for up next 5 to 10 hours. For about next 5 hours, which was about the entire day today. So first bar of the day, we have a doji bar, big tail on the top of the bar, failed to break out above the previous day high, big tail on the bottom of the bar as well. And we were sideways for about 10 bars yesterday. And the first bar of the day today itself is a doji which opened within this range here. So more likely a trading range open, more likely sellers above and buyers below. I provide you to wait for more information before you take any trade. Second bar, we failed to break out above the day high and a sell signal, however, with a bull body. And this bar here is forcing me to sell too low in this overall trading range. More likely buyers below the low of the bar rather than sellers. Bar 3, bear entry bar for the bears who are selling below the bar too low. However, this is not as strong as an entry bar that the bears would have hoped for. The bar did not close below EMA. It has a tail on the bottom of the bar. And this clearly looks like a limit order market to me. We had a big tail on the bottom and the top of the bar on bar 1, a tail on the top of the bar on bar 2 as well. However, whenever there are too many tails and lack of strong bars and lack of strong follow throughs, it means a limit order market or a trading range market. All you have to do is buy low and sell high. So right now, I'm only looking to buy low and I'm only looking to sell high unless there is a clear breakout up or down. Bar 4, big bull breakout bar, breaking out above the previous day high. However, we are yet to go above the day high yet, above the bar 2 high. This strong bull bar can also be a bull trap, a possible double top with bar too high. The bulls needed one more bar here to flip the market to always and long from this trading range open. If they do get that, a strong follow through, I would look to buy. If they don't, and instead get a sell signal bar here, I will be looking to sell. Bad follow through, a disappointing follow through for the bulls, bar 5, and also a low to short with bar too high. However, a terrible sell signal bar for the bears. Disappointing follow through for the bulls, but also a terrible sell signal bar for the bears. If the bears do sell here, they can do that only for a scalp. Whenever the sell signal bar is weak, the market usually does not fall far enough. It will fall only for a scalp here. I would wait for a better sell signal bar for a better probability here. However, more likely the market might fall for a scalp here, which it did. Bar 6, bear bar, big bear bar. However, what do you expect the next bar to be? We had a big bull bar and a disappointing follow through, and now we have a big bear bar here. And we are failing to break below the EMA. We are failing to close below the EMA. So this is more likely still in a trading range market. I will look to short if the market starts giving strong follow throughs here, or if the character of the market changes. Right now, this is the trading range market, mostly a limit order market. I'm only looking to buy low and sell high here. Bar 6, disappointing follow through for the bears here. Barely closed below the low of bar 6. Also, didn't close below the EMA. Big tail at the bottom of the bar. Limit order market. More likely buyers below and sellers above. Bar 8, strong buy signal bar. A high low double bottom with bar 3 low. However, you can buy above this only for a swing. And why is that? Because the probability is quite low. You are buying. The market has been in a trading range for the last 10 bars yesterday and for about 8 bars today. So about 15 to 20 bars, the market has been in a trading range. This is a breakout mode situation. 50% chance will break out above and go for a measure move up. 50% chance will break out below and go for a measure move down. And 50% chance the first breakout up or down is going to fail. This bar rate is forcing you to buy high in this overall trading range, which makes the probability quite low. There are more likely sellers above and buyers below. So if you do buy above bar rate, you have to buy for a swing and aim for a breakout above bar 5 high and a measure move up and not for a scalp. I would not. I would not buy on this bar. I would wait for a breakout above this bar high and then look to buy. With all the tails and bad follow throughs, I expect the market to remain in a trading range for a couple of hours before it decides one direction. So more likely sellers above bar rate, buy here only for a swing, or else wait for a good sell setup around the trading range high. Bar rate, disappointing entry bar for the bulls here. The bulls who bought above bar rate will be looking to exit near break even, which is what happened on bar 10. The bulls who bought here were disappointed by the follow through, and as soon as bar 10 went to their break even price, they exited. Reasonable to sell below the bar 10 low. The bulls are exiting here, and we are near the trading range high. The EMA looks flat, and there's a gap between the EMA and the low of the bar. Reasonable to sell here. The bulls have attempted to reverse from EMA for about 3 times and have failed. The bulls have attempted to break out above the previous day high 3 times and have failed. Whenever the market tries to go in one direction, 2 or 3 times and it fails, it usually goes in the opposite direction. Also, you can say this is a head and shoulder stop with bar 2 and bar 5. Reasonable to sell below bar 10, but only for a scalp. Good follow through for the bears. Strong bear bar. However, the bears need one more bear bar here to change the character of the market from a trading range to a bear market. We are right near the low of the trading range. And looking at all the bars to the left, bad follow through is more likely then a strong bear breakout, and a measure move down. So if you did sell below bar 10, and if you are still holding short on the close of bar 11, you shall exit 50% of your quantity for a scalp and hold the balance 50% for a swing. If there is a bad follow through, exit the remaining 50% as well, which is what happened. Bar 12, bad follow through for the bears here. A high to buy setup for the bulls, also a high low double bottom with bar 10 low, bar 1 low. If you, it is another way to see this is that bar 8 was a double bottom with bar 3. We broke below the double bottom and we are reversing up now. So that is a variation of wedge, a failed breakout below the double bottom and reversal up. So you can say this as a high to buy setup. You can say this is a high low double bottom with bar 1 low, or you can say this as a failed breakout below the double bottom, a variation of a wedge and a reversal up. Reasonable to buy above bar 12 for a scalp. We are near the trading range low and a good buy signal here. Terrible follow through for the bulls here. Can you sell below bar 13? This is too low in a trading range to sell. I would rather wait for a breakout below the bar 1 low and for a follow through before I look to sell here. This is a buy zone, so more likely sellers buyers below the bar 13 low. Bar 14, bull bar. We're still near the trading range low, so more likely buyers around this area. Bar 15, low to short at EMA. However, this is too low for me to sell in a trading range and a terrible sell signal bar as well. Not high probability sell, more likely buyers below. Bar 17, the market is entering a tight trading range here. Rather than looking this as a swing sell setup, this is a limit order market at tight trading range. There are more likely going to be buyers below the low of the bar. Bar 18, we didn't even go below the low of the bar and we found buyers and we have reversed up. However, bull bar bad for the bull bar bad for the bull bar bad for the. What do you think will happen after bar 18? Bad for the through is more likely, which is what happened here. Also, you can say this is a small minor wedge here. And since this is a trading range and we have been up for about 5 to 8 bars here, reasonable to sell below bar 19 for at least a scalp. Bar 20, we didn't even trigger the sell signal below the bar 19 low and we have reversed up. However, can you buy here on a breakout? Can you say this is a breakout above the wedge bear flag? The market might go for a measure move up. So can you buy this? I would not. Look at the bars to the left. We're still within this tight trading range. High probabilities to wait for a clear bull breakout before you look to buy. This is the sell zone. So more likely look to sell around this area. Bar 12 is that sell signal. Let me remove this previous high. This is not much important now. More important is the day high right now. This is another variation of a wedge here, a small minor wedge with bar 19, bar 20, and bar 22. Consecutive wedge shops. However, can you sell below bar 22? A high rise double top with bar 9 and a parabolic wedge as well. I would wait for a second entry buy, second entry sell setup. This is the channel up is too tight for me to sell. More likely buys below the low of the bar. Whenever the channel is tight, the traders usually prefer to sell above the bars rather than below the bars. So higher probability to wait for a second entry short here. We found buyers below the low of the bar, 22, and we have a high one buy signal bar here. However, more likely sellers above. Wait for a second entry short, or you could even look to sell below the bar 23 low, which is what happened here. This on a smaller time frame is a second entry short, which I was talking on bar 22. As soon as we fell below bar 23, the bulls gave up and we have this big bear buyer. Our trading range market looked to scalp for about 10 to 20 points here. We almost fell for about 20 points here. EMA is flat, so more likely buyers below the EMA and sellers above the EMA. The market just entered a tight trading range here, a very quiet market. If you did sell and look at the price action here, 50% of the quantity you would scalp out, 50% you would hold, expecting the market to go further down. Bar 31, another bear breakout bar out of this side trading range. However, we yet to break out over uh, beyond this overall, below this overall trading range, and we are approaching the buy zone. Here, so more likely buys below the low of the bar 31. Bad follow through is more likely. Look at all the bars to the left. After every bear breakout bar here, bad follow through. Bear breakout bar here, bad follow through. Bear breakout bar here, bad follow through. And we are near the buy zone. So I'm more likely looking to buy somewhere around this zone, waiting for a buy signal rather than sell. If the market starts giving 2 bars, 3 bars, 4 bars closing near the lows, I would change my mind and look to short low. Bar 32, low and short sell signal. However, more likely buys below. We have a small bull body bar here, not a great buy signal bar here. You could buy since there is a since the EMA is flat and there is a gap between the high of bar 33 and the EMA. However, higher probability to wait for a better buy signal, a buy signal with a bigger bull body, rather than buy above this. Bar 37, a good buy signal here. You could say this is a wedge. You could also say this is a triangle here. One push, two push, three push, and we have two pushes up here, bar 5 and bar 22. Wedge bottom, triangle buy setup, high low double bottom with bar 12. Reasonable to buy above this, but only for a scalp. The market is quite very quiet today. So any trade you take, you have to be quick to exit, which is what happened once you get a bull buy here and a few bad follow throughs. You you should exit your longs for a scalp. You can see the market was rallying for about 20 points and then reversing again. Around this area, I'm looking to sell, but I'm looking to sell a little higher on a little higher away from the EMA. However, no sell signal anywhere around this area. The market had another bear breakout bar here. However, yet to break out below all of these bars to the left. High probability to wait and look for a buy signal instead. Strong buy signal here, bar 46. Reasonable to buy above this high. EMA is flat. There is a gap between the high of the bar and the bar and the EMA. This is also a failed breakout below the triangle and a reversal up. You can also say this is a failed breakout below the wedge and a reversal up. Or you could also say this is a lower low double bottom with bar 37. Reasonable to buy above bar 46 for a scalp. Expect strong follow through here. 4 strong bull bars. However, we broke out below this low and found buyers. What do you think will happen after we break out above this high? We are more likely going to find sellers above. The market is in a tight trading range, in a limited order market, so you have to expect the breakouts to fail. We have a breakout above bar 40, and that is more likely going to fail. However, with 4 strong bull bars, more likely buyers below the low of any bar for at least a small second leg up. Bar 50 is a doji. You could buy below the low of bar 50. We are in a 5 bar bull micro channel, and at least a small second leg up is likely. This might be the small second leg up, which I was talking about, bar 55. We went up, we did pull back, and we have reversed up. However, not strong buying is happening. The bulls are failing to strongly break out above this breakout point here. We did pull back at EMA. However, the follow throughs are not that strong. More likely, I'm looking to sell here. However, no strong sell signal yet. Bar 59 is a good strong sell signal. You can also say this is a wedge. You can also say this bar 49 and bar 56 was a double top. We broke out of the double top and we are reversing. So that is also a variation of a wedge. There is a gap between the EMA and the low of the bar. So whenever the EMA is flat and there is a gap between the low of the bar and the EMA, it is a reasonable sell signal, a stop order sell signal. So you could sell. The market did correct here. However, 1, 2, 3, 4, and 5. So this also makes bar 64 an expanding triangle bottom. So a lot of lines here. Whenever you make a lot of lines on your chart, you have to understand the market is in a trading range. The easiest thing to do when the market is in a trading range is look to buy low and sell high. Look to sell high after two legs up and look to buy low after two legs down. That is the easiest thing to do. We have first leg down here, we reversed up, and this is a strong second leg. However, we are still in the trading range. So this strong second leg is more likely going to be a second leg bear trap in a trading range rather than a strong bear trend. So I'm looking to buy here. However, after 4 or 5 bear bars here, can you buy on a buy signal? No. I would wait for a second entry buy setup. The, After a 5 to 6 bar bear micro channel, there are more likely sellers above the high of the bar, which is what happened on bar 68. As soon as we went above bar 67 high, we found sellers and we reversed down. However, I'm waiting for a second entry buy signal. So look at bar 69. As soon as we dipped below bar 68, we found buyers and we reversed up. So bar 69 is a micro double bottom with bar 67 and bar 69. Micro double bottom here. And you could have bought over bar 68 as the bar was forming. This is more likely a second leg bear trap in this overall trading range. And we have a micro double bottom here. So reasonable to buy above bar 68. We reversed up. Uh, this was towards the end of the day. And I was expecting the market to close somewhere near the open. So if you did buy above the bar 68 or above bar 69, you had to exit around the open of the day. The market was expected to close somewhere around that area and it did that. So very quiet, very few trades today. The few of the easier trades today, few of the easier stop order trades today would be bar 12, high to buy setup here, high low double bottom with bar 1 low, would be bar 10 as well, head and shoulder stop with bar 2 and bar 5 would be the second entry short here after this tight bear channel up, tight bull channel up, a higher double top with bar 9 and a second entry short, bar 37, a wedge bottom and a high low double bottom, a triangle buy setup. Also, this was around midday, 12:15, around which the market usually moves, gives one good trade, gives one move. Even bar 59, sell below bar 59, buy above bar 46. And towards the end of the day, difficult to buy while the bar was forming, but if you did, you got a good scalp here. It's a very quiet day, a limit order market. Difficult to make a lot of money on a day like this. The maximum you could have done here. Okay, so what do I expect tomorrow? If you look at the daily chart, this is a bull channel with a lot of overlap. After every breakout, we have pulled back. We broke out above this high, we did pull back. We broke out above this high, we did pull back here. And now we have broken out above this high here. So I'm expecting the market to pull back. I'm expecting the market to at minimum close, fall below this breakout point. We did attempt to get close to that. However, we reversed up and the breakout, the gap is still open. So I'm expecting the market to close this gap here at first and then approach the daily EMA next at a minimum after a wedge top. You can see there's a wedge this way as well. There's a wedge this way too. Different ways to look at this. And after a wedge top, the market usually corrects for 5 to 10 bars for about 2 legs, for about 10 bars and for about 2 legs. So we have fallen for about 5 bars here. I'm expecting the market to remain sideways to down for another 5 to 10 bars on the daily chart. So tomorrow, I will be I will have a little bearish bias tomorrow. Expect the market to close this gap here and maybe test the daily EMA as well. If the market does open flat, if the market does open flat around the previous close, I will wait for the market to break out below this low with a good follow through and then look to get short for a sell off somewhere to 25,318 and the next to daily EMA, which is about 25,228. If it does go up, I will wait for a failed breakout and look to sell. I'm expecting the market to remain sideways to down tomorrow. Not very inclined to take any long trade tomorrow, a swing long trade tomorrow, except if the market opens a strong gap up and breaks above this high. Until then, even if it does go up, I'm expecting the market to have a second leg sideways to down after this wedge drop on the daily chart. So even if it does go up, it will find sellers somewhere around this area and reverse back down. So I will be looking to sell tomorrow. That's it. Best of luck to everyone for tomorrow. Hope you all have a great day. See you tomorrow. Bye.